Hi, welcome to Shri Management channel. Today we are going to discuss about advance tax. What is advance tax and then who has to pay advance tax? And then really how do we calculate advance tax? So in case if you have to pay, do you have any specific dates before which you need to pay advance tax installments? It's a key thing because we are already in the August 2023 and the advance tax installment dates are fast approaching. It's very important to know them. So let's deep dive. At the advance tax concept. So typically when we earn income during the financial year, let's say that between 2003 and 2004, the assessment of that income would be done in the following year, and then we will pay income tax as part of return filing. However, the concept of advance tax is to pay the tax on the income in the previous year itself. That means in the year 23 and 24 itself. So this means that as and when the income is earned, we pay a tax on that as part of installments. That's the concept of advance tax. And who is liable for that? It's every SSC, irrespective of their tax status and citizenship, is responsible for advance tax payment. However, the only caveat here is the advance tax amount so calculated shall be greater than 10,000 rupees. Only then he or she is liable to pay an advance tax. So the overall concept of that is pay as you earn. So that's the concept of advance tax. So how do you do calculation to arrive at the tax calculation? So the tax calculation is pretty simple. Let's look at that in detail. So we'll start with the estimated gross total income. So your estimated gross total income would be sum of the income you are earning from different sources, be it salary, be it business income, and be it the income from other things. And from that, you need to deduct the deductions which are allowed as part of Chapter 6A. That means deductions as part of 80C, 80D, and all the 80C deductions, whichever is allowed. That's how you would arrive at the estimated total income. And basing on the estimated total income, depending on the tax slab you belong to, we need to get the calculation of gross tax liability. So let's say it's 30% tax slab you belong to, or let's say you belong to even more, then depending on the tax slab of this specific financial year, you arrive at the gross total tax liability. And here, pay attention that we are saying this as an estimated total income because we really do not know what is the actual income of the year until the end of the financial year, let's say 31st of March. So we go on calculating this based on the estimated total income. Then if there was a rebate as a part of 87A, that was be deducted from the gross total liability, and you arrive at the tax liability after the rebate. And in the case of surcharge, that has to be added to it. So that will give us the tax and the surcharge we need to pay. And if there were some health and educational cess, that has to be also added to that amount. And that would result in the total tax liability after the cess. So for good, and then in case if there was any TDS deducted, let's say that you are already in September or already you are in the month of December, you would definitely get these deductions already done. Let's say from the banks where you have deposited your deposits, or from the employer where you are employed with. These deductions will be available to us as part of Form 26AS. So you need to deduct the tax deducted at source or tax collected at source, and then will arrive finally about the tax liability, which is the advanced tax liability. So the calculation is pretty straightforward and simple. And then I have a separate detailed video how to use the tax calculator, which is provided by the income tax website. The link of that I would give in this description of the video below. Do check that out. So there are typical dates which you need to keep in mind while you are paying the income tax. So it's not one date like how we do the annual filing, but there were different dates which was given typically at the every quarter. So these dates are common irrespective of its being an individual or a corporate taxpayer. The first date is 15th of June, and then we have to pay 15% of the advance tax on that. The second date is 15th of September. So until 15th of September, we need to pay 45% of the total advance tax, less in case if there was already paid in the previous installment. And the subsequent date is 15th of December. Until that date, 75% of advance tax has to be paid, less any advance tax which has been already been paid. And the final installment amount can be paid on or before 15th of March. Typically, 100% of advance tax should have been covered by the date to avoid any interest or any late payment charges. Typically, if you miss any of these dates, the interest rate on that would be levied when you are filing the actual returns during the assessment year, which is 24 and 25. However, there is a different sector of people, let's say the income from business, and then professionals like doctors and lawyers who are exempted and then who follow Section 44, ADA. So these people has only one date. They has to pay on or before 15th of March. 100% of tax has to be paid that day. So this gives quite amount of leverage. They can calculate these installments and pay it on a periodical basis, so that there's no burden of paying the advance tax on one specific date. Let's see this overall process how it looks like. So you have to compute the advance tax like using the tax calculator. The link of that I'll provide in the video below. And then once you really realize that you have an advance tax amount greater than 10,000 rupees, then you can really do the calculation and deposit the advance tax. And let's say that if there was any revision, subsequent quarters, you earn additional income, and then if it has to do a revision on that, it's pretty straightforward. You need to pay do the advance tax adjustments and pay corresponding installments on the typical dates. So you need to just deposit the advance tax amount. So the key difference here you need to remember is that there is nothing to file like an ITR or a return to the income tax, but it's an online challan where we just remit the amount to the bank account of Government of India. We'll have a detailed video on how to generate an online challan as well. Do watch that. Thank you so much. And of course, don't forget to subscribe. The YouTuber would be happy. Thanks for that. Bye.